Jacksonville, if you look at the main drivers of home price appreciation, you look at population growth. I was pulling the stats, and don't quote me on the numbers here, but it was like 1990 to 2017. We were looking at population growth across all of the major cash flow markets out there.
Right.
And you've got like Cleveland. Cleveland had like negative 24% growth. I mean, people were leaving Cleveland. Jacksonville's population grew 40% in that time span. And we were one of the fastest growing MSAs. Over the last, I think it was the last 2 years, we were one of the fastest growing MSAs. They put an article out there on one of the major publications. But yeah, we track population growth. That's obviously people have more of a demand for housing, and so track months of supply.
Okay.
So months of inventory is really a big indicator for us. Do you pay attention to that?
I do a little bit. Yes, I do.
Yeah. So if you have low months of inventory, that's an indication that you should see higher than normal home price appreciation. But over the long haul, since from the last 27 years, we've experienced 4.32% appreciation in Jacksonville, which is a lot higher than any other market where you can get positive cash flow. So I feel pretty good. So is your long-term plan to stay in Jacksonville, to build up the active business in Jacksonville? I know you said you were in New York before.
I was, yeah. That's where I'm from. I'm from New York, and then lived in New Jersey, lived in Tennessee, and now down here. But my long-term goal has always come down to Florida. It's always been between the weather and the growth. Yeah, I wanted to come down here. And now that Jackson was blowing up, that's why I'm trying to figure out the investment side so I could try to get in there early, if it's still early enough. But I think it is.
Well, and I don't really try to time the market. I mean, I started buying properties 13 years ago. It was 2006. So ask me about timing the market. I bought it in 2006. I had 40 rental and I was 23 or so. And of course, at 23, you think you have it all figured out. I had nothing figured out when it came to to real estate. But I got one thing right, which is I started to buy rental properties.
Right.
And I also had the mindset that it didn't matter what the market did, if it went up, if it went down, because I was going to hold on to these things for 20 years or 30 years or whatever. Right. And my theory really got tested because 2007, 2008, 2009, we know what happened. The market crashed. But it didn't affect me at all for these 40 rental properties because the rent still came in. My properties were still occupied. Right. Okay. And I didn't care that on paper, my wealth went way down.
Right.
But my cash flow was right where it always was. Right.
Interesting.
And if you don't care about selling for 30 years, it doesn't matter what the price of the home is or the market value of the home is for, a few years after you buy. And then, if you follow trends, real estate cycles tend to repeat themselves in a market after 10 years or 20 years. It's a cycle.
Right.
And so that's why we continue to go big into it. Even after on paper, me losing a whole bunch of money, we went bigger into it because we knew that 10 years, 20 years down the road, we were going to be fine.
Right.
And that's where we are today. And that's what's going to happen over the next 20 years, right? We're going to have the market's probably not going to crash as much, but it's going to go down at some point.
Right.
And then people will get scared.
Always.
And they will get, like always, and then values will go down, and then investors will start buying again because returns are so good compared to everything else, and then everybody else will jump back on board. And then, me and you will be having the same conversation in 20 years, man. I mean,
laughing about it like we are now.
It's a cycle, and I love the consistency of it, right? I mean, we talk about the consistency of the cash flows, but there's a consistency in values too.
Right.
The only thing is you got to have that long-term mindset.
Right.
Just park it. Find a great management team, park it there, have it be a passive income stream, and work with people that you like. And then 20 years from now, man, you're in a great spot.